Okay, no? Can you hear me? Hello?
Yes, sir, we can hear you.
Right, okay. Now we are moving to the sales promotion. So today I'm going to rush little bit off because I'm going to finish this today, right? So we have to cover another area, but don't worry, we may cover. And I want to tell you, we are going to have a revision, so you can join, you can check the web also, and a date, I think in mid May or somewhere we will see, right? Or otherwise I will try to come in another day, but only problems are we don't have a time, right? But doesn't matter. So you, with this stuff, you can pass, you can get a B also, right? Okay, so we move into sales promotion now. Now sales promotion is a promotional technique, it's a short term in nature. Now, what sales promotion communication method? We are trying to stimulate sales. Now, these sales can be targeted among customers and also traders and salespeople. Now, how can you do that? Now, for customers, also you can sell. Remember, sales promotion you are using only for a particular period. Now, say for a short period. Now, say banks also using sometimes. Now, say for an example, Women's Day, Children's Day, or Independence Day, Bank 75th anniversary or something, that you can say in order to mark the bank 100th anniversary or 75th anniversary or 50th anniversary or whatever, right? Whatever, you say, I will give you a gift, or babies born on Independence Day, or beepers be born on our anniversary day, our the bank anniversary day. We give you a free 100 rupee or 1,000 rupees gift token, no account or something. So that is a sales promotion. It's a short term targeting customers, right? Trade mean in your case is banks. Now sometimes, now certain trade in for a consumer market, if you sell this product, they will give you some gift. They have a gift, right? Sales people mean give incentive to sell the more product. So therefore sales promotion can be targeted three segment. One is for customers, trade, as well as the sales people, right? And can be immediate or delayed. Now what do you mean by immediate or delayed? Now sometimes immediate mean on the spot. On the spot you give some gift. Sometimes delayed. Delayed mean some draw or some lottery. Now banks cannot be have the draws. No, delayed in situ means you send the coupon, or say there is now in especially in consumer products you have a separate some SMS number, some number other side of the packet or some grid or something. You say, okay, please SMS this number to SMS the number there in the packet, so you can have it, right? So those are delayed incentive. Now say for an example, now in the banks we say Polia Kalima Atata, right? Some banks are telling no Polia Kalima Atata. What do you mean by that? So that means interest paid upfront for FDs. Now Sampath is having something, but all banks are having, right? Polia Kalimatara, that means like treasury bills. You don't want to pay full amount for FD. So say 100,000. So you have to pay 90,000. So end of the year you get 10,000. So that is sales promotion. Interest upfront. But usually how we are getting, the interest is usually getting when you put a fixed deposit after 1 year, right? So these are some sort of a sales promotion technique. That is why I call immediate or delayed, right? Now, what is the objective of sales promotion? It encourage product trial. Now, once you introduce a product, usually we carried out sales promotion as an introductory offer, free sample or something, free gift as an introductory offer, right? And encourage greater use. Now because of this sales promotion, non-users use, right? And then you noted that, so there's a sales growth. right? So then the user get to know this product is good, so they continue to use. Now, why they use this product? Because of promotion, short-term promotion. So use, and you noted that this product is good. So therefore, he's continuing to purchase this. And third one, to encourage brand switching. Now the brand switching, now say for another example, I will call, take two toothpaste for an example. Two toothpaste for an example. Bank also can use, right? Take two example. Toothpaste. Signal versus, we'll say, Klogard. Now, Signal have some promotion. If you buy a Signal, you get two brushes and some Unilever product along with that. Right? It's a sales promotion. නැත්තම් තුනක් ගත්තම one two are free. Then what happened? The guy who used Klogard switched to the Signal. Right? So why he switching from Klogard to Signal? Because of sales promotion. So that is what you call brand switching. Right? So combat competition. Combat competition means you want to combat your competition. You want to fight with your competitor. So you use sales promotion. Other permanent, right? They are saying only for limited offer today only, right? There are some lot of things. No? So like that, it's a sales promotion. Right? And to stimulate large order sometimes, because they will give you, if you buy today, say for example, 5 units, right? You get a special 10% or 15% discount. So a lot of supermarkets are doing things like that, right? For bank also using, but more or less is used by the consumer product, sales promotion. Okay, now this is another techniques. Now what you need to know, you need to know what are the advantages and disadvantages. Now what are the advantages of sales promotion? So these are the objectives. Objectives are the advantages. You need to improve your sales, as well as you need to motivate your staff and motivate your customers, right? You want to build up long-term customer base, right? You can use this sales promotion techniques. Okay, sales promotion techniques. Then you have a public relation. Now what is public relation mean? Yet another, now remember, is another communication promotional tool or marketing promotion mix element. Now what is PR? Now sometimes you have a PR manager in your organization, public relation manager. So what is he saying? His role is deliberate, plan, sustain efforts to establish and maintain mutual understanding between organizations and public. Now things on this. Now if an organization, you have a different type of public groups, different type of people you need to develop. What are the as an organization, say for an example, for bank. Now bank has to deal with different groups. What are the groups? Media, then government, maybe local authorities, then customers, then competitors, then lobby groups, pressure groups. Likewise, there are maybe different type of public group a bank need to be deal with, right? Why? So because if you have a good rapport with the media people, so they won't put unwanted, unnecessary, unnecessary, they won't put unnecessary bad publicity about your organization, right? So that is what you call that is what you call the what you call these that is what you call the better relationship with this media people, right? So therefore, so for them, the objective of public relation is to change the company's image and keep the right type of image. So when you're dealing with, now say you said you are, say for an example, for a person, what you say, you have a very public relation officer, right? Go getter. What do you mean by that? That means you have a big rapport with everybody. You have a lot of friends. Wherever you go, you have a friends, right? Everybody you know. You have no problem. So like you, an organization also need to deal with different type of publics they come across, right? Why? Because they want to keep their image and without tarnish their reputation, right? So it also improve the community relations, right? So therefore, regain the public confidence after crisis. Something happened to your organization, we want to rebuild your customer confidence. For that, we may have a certain communication techniques. That is what you call public relations, right? Public relations, right, is another communication method. Now remember, all you need to pay, right? You need to pay, right? Organization incur cost to communicate these things. Now the next one is the publicity. Now most of the time, lot of people are basically confused with public relations and publicity. Now publicity is being any form of non-paid, non-personal communication. Now you noted advertising. Can you remember, advertising is a paid form of communication, but publicity is a non-paid form of communication. So only publicity you don't want to pay, right? Now it's very difficult to control the publicity, right? Now I will tell you example. Now you are going to open a branch. You are going to open a new branch. You may call a politician, maybe some person, or maybe some special character, right? Some politicians. Now, once the politician come to open, or maybe some known character, maybe actor, or maybe cricketer, or maybe singer, or whoever, you invite to opening function when you're going to open a branch. So, because of that person, because of the politician, lot of media people are comes to cover that event, right? Now that person may say something. Now say for example, uh, we'll say some character, will you some character from the from the uh, so specific character from the politician. Now he come and make a statement. So what government going to give? So he make a, now say we invite finance minister. Now finance minister supposed to be the prime minister. No? So we'll invite a state minister, Mr. Ajit Kabra, and he come and tells as a guest, as a chief guest in your branch opening. He said, okay, we government took a decisions to increase the interest rate from today 10 to 15% from next week or something. So then what happened? Tomorrow's paper highlight government going to increase the interest rate from present 5% to 15%. Or maybe senior citizens, the interest rate may be going to increase from 15 to 20%, like that. So tomorrow's paper highlight, first front page, main heading is what? That. Why? Because publicity. That is, you media people mention that, okay, state minister Mr. Ajit Kabral announced the senior citizens interest rate is going to increase from 15 to 20% uh, from May onwards, for example, right? While he was made this statement, while he was opening the branch in ABC Bank, new branch in Ratmalana, like that, right? So this is free publicity is coming to, okay, right? So this is another method of communication, right? Okay, the next method is what you call sponsorship. Now I think a lot of institutions, lot of banks are carrying a lot of sponsorships, right? It is a corporate communications tool available to the marketer, right? The banks will sponsor this activity. Say for an example, cricket match. Now we can remember, now you also can remember certain cricket matches are especially the UK NetBase. It's a cricket bank will advertise the England team, right? Some series of test matches was now NDB. I can remember NDB or DFCC. I can't remember. They sponsored certain one-day cricket tournaments, football, right? Some banks can come up with sponsorship, right? And also, it's another way you can communicate, right? Then you may have a lot in your playground. You may have a billboards, and then you may your chief CEO come and award the best player or best cricketer or somebody. So there may be a lot of marketing can be done through sponsorship. So sponsorships also another method of communicating to customers. Sponsorship for not only cricket, maybe other CSR activities, social corporate, social responsibility activities, right? Those are the things. Then you may have some exhibitions and trade fairs. Now, you may participate in exhibitions and trade fairs. Now, example, in banks are very heavily participating in architect exhibitions, especially all these construction exhibition. So they have a stall there, and what they are selling, they are trying to sell their what product? Housing products, right? Housing product. So people who are interested about the housing, they usually come and visit those exhibition. And Sri Lanka very famous one is book exhibition. Now one bank is usually participate and in these exhibitions, right? But majority of constructions like lifestyles, so personal loan exhibitions like lifestyle exhibitions, then architect exhibition, then construction exhibitions. So a lot of bankers are participating in there, have a stall there. What they try to do, they try to sell their housing loan to the customers, right? Okay. The last one in the communication method, you can have a promotional literature, or what you call leaflets, right? Leaflets. Now, leaflets, what are the advantages of leaflet? It's very cost effective. Leaflet means distributing certain leaflet. It's a cost effective method. And also you can incorporate or insert it to the newspaper. Sometimes you get some persons in the local area. Now, say a good example for if you open a branch, right? You go and meet the local the newspaper distributor, and you can insert some leaflets in your branch opening, right? Or in the local distributor, or you can insert from the newspaper company. They also insert. So these are new methods of communicating to the customer. And also because of promotional literature, you can communicate a lot of information to the customers, not like TV advertising, not like the radio advertisement, right? So promotional literature, you can put a lot of information about the product, and you can improve your responsiveness, you can measure, right? So there are a lot of advantages of using promotional literature. So what we have discussed up to now, or what type of promotional methods a bank or a marketer can use to communicate their product and services to customers, right? Okay, so we discussed earlier, today we are using a lot of new things in today's in social media. That's another method, right? Or we call them as digital marketing areas. Okay, so these are some other methods, traditional methods we used earlier. Okay, right. So then we are moving to another important method, what you call extended marketing mix element. Now, up to now we discussed product, promotion, place, pricing. Now we are going to discuss extended marketing mix element, where only may be specific for services industry, only specific for services industry. So let me explain now, right? We call extended marketing mix. That is why we call 7Ps. People. Now, what is people? For people, for a bank is you, that is employees, right? Now, you are the people and you are the individuals who have contacted with customers, right? Usually, what you are referring to, staff, right? So therefore your skill, your knowledge, and your attitudes, your competency play an important role. Now people, the staff, make the difference between X banks and Y banks. So why some people say Y bank is better than X bank? Why? People make the differences, right? So remember, the most imperative factor in service delivery is people. Most imperative factor, right? And the service quality depend on whom? People factor, right? And it is if you want to provide them a better, faster delivery, so it depends on how efficient you are, how skillful you are, how knowledgeable you are. So therefore, it is important for an organization to recruit the correct people and give them correct training and educate them, then to provide the better customer services, right? So whatever you do, right, is useless if your staff is not catering to your customers, right? So therefore, because the customer and the bank, who is the intermediary, is you, that is people, right? So therefore staff should have an excellent knowledge about whatever the question asks, you in a position to ask that. In order to do that, you need to develop your knowledge about your products, about your competitors' product, about your details about your industry, about your bank. That is why at the induction training, we may give adequate training about your organization, competitors, products, and all. Right? So the people make the difference. That's why I told you is the most imperative factor in service delivery. So that is marketing mix element. We call extended marketing mix people, right? For that, we must give a training. We must have an effective selection. We need to motivate them. We give to them a better salary and support it with IT system, right? So why all things we giving? So it is one of the main ingredient of the marketing mix, right? Like like price, people also play an important factor, important element in the marketing mix. Why? Because that is only live element in the marketing mix. Price is only revenue generated element in the marketing mix. Likewise, people only the live element in the marketing mix. Okay, right. So therefore, it is important for, as I explained to you, provide them adequate training. So therefore, staff must be polite, friendly, attentive, and helpful. These are the key words, right? If you want to differentiate your bank with another bank, so people play an important factor, right? These are one of the element of the marketing mix. Okay, next element. Next element we call the process element. Process element. Now I will tell you an example. Right. Now process means a fundamental component which comprises of rules, regulations, system, procedure to maintain uniformity and a consistency. Right. Now I'll tell you an example on this. Now you see the uni insurance business. Now earlier the market leader is Sri Lanka Insurance. They are the market leader in Sri Lanka in insurance business, especially for especially in the long term. I mean accidents, right? Vehicle insurance market. Now how the Selinco has grabbed that market? How Selinco has grabbed the market of Sri Lanka Insurance. They introduce a concept called we don't want police report. They introduce what on the spot, on the spot. So what do you mean on this? Now you have to know what's the procedure. Earlier, what is the procedure if you made an accident? What you need to do, you need to get a police. You need to call police guy and call them, and you have to have an entry. And with the police report, you need to lodge to get an insurance claim. That's a normal procedure. That is a process. If you want to get an insurance claim, the process is this. Once you made an accident, police people has to come, right? He has to make a police report, and this with the police report, you need to lodge your claim. Then all the insurance people pay you. Now it's a headache, when you made an accident, calling a police guy to accident place, headache, right? People are fed up with this type of process. So what Selinco has identified, okay, so how can you simplify? How can you provide benefits to the customer? And they introduced the concept called on the spot, right? They want, what are they, come and pay you and go, right? What they have done it, they have changed the process element in the marketing business, right? Likewise, now banks also do. Now earlier, when we at the bank at a very early stage, get a housing loan, get a personal loan, my goodness, we need to take 1 month, 2 months, 3 months. Now today, you go maximum of 2 weeks, 3 weeks, you can get the housing loan. Even there may be a loans you are getting on the same day, certain personal loan. Think about getting a passport, 1 day services, getting your identity card, 1 day services. So what happened? What they have changed? The process they have changed. You can get a passport within 1 day, 1 day services, and maybe take to normal process. So what they have changed? They changed the process element. So this process is the 1 day process is the one tool of the marketing, right? So how deliver to customer is the end result of a process. So you are trying to streamline this process. Example I quoted to you, Selinco Insurance. So on the spot. Now today, so once they have introduced this on the spot, all the insurance companies now are adapting that. Otherwise, they are losing the business. They may modify that process element, right? So process is another element of the marketing mix, right? Now process facilitate the technology. Process facilitate the technology, right? So there are 3 major issues with processors, right? When you have a processors, 3 major issues. One, efficiency and effectiveness. Mechanization rather than automation. Then fragmentation. Fragmentation means, so suppose your activity, your processes depend on different divisions. Now example. Now say for an example, once you hand it over the housing loan application, somebody has come and look at it, your house, then legal department need to look after your titles and all, then another party will come, valuation part. Likewise, the entire process is fragmented, depend on that, right? So these are the issues. Now if we want to provide a better customer services, you need to address these 3 major issues in the process. If you can improve your efficiency, effectiveness, mechanization rather than automation, that means the digitalization or whatever you call using your technology, and fragmentation. If you can address these 3 issues, so you can provide a better customer service. So therefore remember, process, is also one element in the marketing, especially in the services businesses. Okay, I think you understood that part. Okay, so if you not understood, please just stop me and tell me quickly, right? I will explain. I explain to you again. Okay, have you understood now? Clear? Right? Students, you are listening to me, you know?
Yes.
Harita. Okay, understood?
Yes, sir.
Right, okay, next one. So we move to the next element of the marketing mix, the last part. That is only the tangible aspects of services. Now we discuss services are what you mean by services are intangibles, right? මතකයි නේද? We learn services are intangible. But how can you convert services into tangibilized things? Right? Most financial products are intangible, but through the physical evidence, you can convert into tangible. Now, what I say? Think about your branch office, right? Your logos, your counters, your branch layout, you provide the physical environment. And most of the banks branches are fully ACs now, fully air conditioned. Easy access to the customers, your officers, right? There may be a lot of ample car parking available, facilities are available. You are having a lot of seating facilities. Then you are provided with lot of displays there and there. Your products things are going. There are some TV sometimes, and there's some fish tanks also there, right? So that will provide you your services converted to tangible nature, right? So remember, so if you want to convert your services into tangible aspect, you need to look at your physical evidence. Right now, physical evidence components refers to what about the physical things, refers to the environment in which the services is delivered and the tangible items which associate with that services, right? Okay, so ample parking facilities. Another important thing I want to explain you, uh, the think about which I also explained last week also. Think about the Kiel Super. What they having? So have a large parking facilities, no? Right? Huge parking facility. That is the main thing. Where car gates now only they also look at it more parking facilities, right? So how Kiels overcome car gates issues by having a ample parking facility. That is a physical evidence, right? Easy access to the obtaining their product and services, right? Physical evidence. Clear? Right. Now you know there is these are we call them as three element of the marketing mix. Now today we are using CDM machines. You see a lot of robotics, right, to facilitate more for customers, right, under the physical evidence. You may have a CDM machines, cash recycling machines. You can deposit the money there, right? You can do a lot of through the machines. A lot of kiosks are there, right? Okay. Now people's bank we have a separate bankings. We know people are there. That's the physical evidence, right? Facilities in the branch. You don't want to go to the counter. You can do your business transaction. So that is the physical evidence, right? Okay, right. Now what are the 7 P's that we learned today up to now under marketing? Product, price, place, promotion, process, people, physical evidence. Now these people, process, physical evidence, we call them as extended marketing mix element. I hope you understood. So what marketers are trying to do These are we call controllable elements. Remember, marketing mix elements are called controllable elements that you can control, right? And provide better services to the customer. Who, any bank, any organization can use these 7 Ps more efficiently and effectively or better than the competitor are winning the customers' market share. Right? The manner in which you use these 7 Ps ultimately deciding your success. That is why we need to understand all these 7 Ps in details. Right? Okay. Now, if you really look at it from these 7 Ps, now you look at it, these 7 Ps, we look at it from the customer's point of view, and 7 Ps, we look at it from the organization point of view, right? There's a comparison. Now, look at it as from organization point of view, that's a marketing mix point of view, product. What is product to customer? Is a solution, something value to them. What is a price for price is for bank? What is the price for customer? We call cost. It's a cost for them, right? What is marketing or what is bank pays? It's a convenience, easy access, right? As far as a promotion, it's a communication to the customer, what they communicated. Physical evidence is a confirmation. People, considerations, to what extent they considered you. Process, a coordination, right? If you look at it, 7 Ps from the bank's point of view or organization point of view, these 7 Ps may look at it from the customer's point of view. It's like this. That is why I call 7 Ps, 7 Ps against 7 Cs. How these 7 Ps are looked at it by the customer, right? The product, always customer look at is a solution for them. Price is a cost. Place, convenience. Promotion, communication. Physical evidence, confirmation. People, considerations. Process, coordination. Process is series of activities. No, you need what we expect, coordinate. We are not bothered about what we need, end product, right? Okay, so these are some of the things you need to learn under marketing, right? So from that point, so we end up with marketing. Okay, clear? Understood? Okay, I didn't get a response from you. Okay, clear? Either. Right, sure. Right. Now we move into the last section of our last sections of our syllabus. So don't worry much. We call clients confidence management. Right. Now, so these are the subject we have covered with you. Type of financial clients, remember we discussed depositors, borrowers, service providers. Then we discuss about the customer protections, laws and practices, right? Then we discuss financial product marketing. Then we started our syllabus with applications of HRM. Now, there are small area we need to cover, that is clients confidence management. Right? So what is client's confidence management? So it's the most challenging thing today, right? And it is, it is difficult piece of the business development puzzle. Why? Because trust today is truly the pivotal point of building a successful business relationship, right? Especially for banks, right? Trust play an important role. So under such situation, right? Why people trust become important? Because the downward spiral of ethics business today, people have not trust the service provider, right? So therefore, clients what they value the honesty. So dealing with this service provider, right? So you need to build trust and confidence of customers, especially for banking industry, right? Okay, so what is meant by public confidence by banks? What do you mean by public confidence by banks? Now, one thing I want to explain you. Now, bank customers need assurance that they have ready access. And in fact, financial institutions conduct their business mainly using the funds of depositors, right? You may learn those things when you go to the DBF very well. Now, why do you think that public confidence in bank is important? One factor, financial institution, remember, conduct their businesses mainly using the funds of depositors. But other organization is usually use the stake shareholders' money in order to do the business. But banks are using public depositors' money. So they take the deposits and give loans and earn profits. Right? So therefore, public confidence play an important role because banks, especially the financial institution, conduct their businesses, remember, from the depositors' money. So therefore, public confidence is play an important role. So therefore, we need to attract depositors, right, and to develop a confidence in the consumer's mind. Right? Okay, so there are four important elements need for public confidence in banks and the banking system as well. First point you can write down there, it is not given. The first point you can write down here, the next page. First point, the bank customers need assurance that they have ready access to their funds and their bank services, right? So one of the important things banks customers are expecting from a bank is what? Once they go to withdraw the money, right? They need assurance. They ready access to their money. They can withdraw the money with the interest and capital, right? The bank customers need assurance that they have ready access to their funds. Once they ask, they want. For that, what they need? Bank need to maintain what? Enough liquidity, right? That is what customers are worried about the bank because they find it out they don't have enough liquidity to pay their deposits. So therefore, they may be panic, right? So public confidence bank is important, but customers are expecting and customers are need assurance that they have ready access to their funds and other bank services, right? Not only that, and remember, so they're expecting their records are safe. They are not going to communicate their information to another parties, right? That is why we have a rules and regulation for customer confidentiality. So we expect our records are kept safe. The second point is their records are safe. So that means my informations are very safe. Nobody's get to know all these things. Third point, what customers are expecting? Customers are expecting prudential regulations and supervision is placed. We as customers, what we expecting? The regulations need to be there. Prudential regulation and supervision is placed. Somebody has to looking after these banks. That is why we have a central bank. So customers are believing they have a very good regulator to looking after these banks, right? Why? So what we expecting as customers, regulator may look after the customer's money by having what some rules and regulations of. We will discuss later on what actions central bank are taken to maintain the improve the customer's confidence level, right? Okay, so the next one, third one, what? Right now, debits are to the accounts are in place and unaltered. So once you put the money, credit the money or debit the money, ensure that so nobody is going to alter. So once you, because those transactions are properly recorded in the books of account, right? Okay, so what happened? So remember, if the public confidence reduces, so there is a likelihood that depositors will rationally panic and withdraw their monies, resulting in what happened, if the customers lock their confidence about the bank, they may little panic. They go to the bank and ask the money, right? So then, how such situation, let's say bank run, we call bank may not in a position to pay, their bank is going to have a problem. So what is the impact on that? We call contagious impact. Patirayami avadana. If the people get to know this bank going to collect, they're going to withdraw money from all other places, all the other financial institutions. So that is what you call what risk? We call systemic risk or contagious effect. So that is a danger. But because it's important for financial system stability of the country. So therefore, the public confidence is play an important role, right? Have a stable financial system or stability finances, maintain the stability of the financial system, right? This is very important, right? Otherwise, what happens? Systemic impact, it will lead to contagious effect, right? Okay, so now you can see how important the public confidence is in the banking system, right? All are depend on the trust and confidence of the public. So that is why public's confidence play an important role in the banks, right? Because people need to be assured that so their money will save when they go access to the bank, they in a position to get the money back if necessary, right? So they're expecting bank to maintain their records saved. They're all the debit transaction, credit transaction properly done. So bank not going to question usually. We believe what banks are telling. Why? Because of the confidence the public face with the banks. If you are not maintain that confidence, whatever, people have not trust, they try to withdraw the money, right? And you can understand the situation. It have a real impact on the financial system stability in the country, right? Okay, right. Now you see the public, how the importance is the public confidence in the banking system, right? So this maybe you may learn under survey, but I just touch slowly on this. What is financial system stability? As I explained to you, it can be defined as the resilience of the financial system to internal and external shocks. So to what extent our financial system are resilient, internal or external shocks, be it economic or financial, political, or any other use, right? So in order to have a financial system stability, you must have a good regulatory infrastructure in the country. That is why we have a central bank, have a very good regulatory infrastructure. They supervise off-site and on-site. And also we must have a well-developed financial markets where customers and deposits and the buyers are meeting points. And also we must have a effective and sound financial institutions, right? So if you have all these three, so we can say we have a financial system stability, right? Just to understand, right? So why financial systems stability is important, right? And because it provide a favorable environment for savers and investors. Otherwise, people they don't want to put the money in your financial institution. They keep it there, right? And also it facilitates to transmit the price stability objectives and the monetary policy objective in the central bank, right? And it's encourage intermediations, financial intermediations, right? And also it facilitates the distributions of the resources. So that is why financial system stability is important. In order to have this financial system stability, important thing is what happen. You must have a customer confidence, right? But if you don't have a financial system stability, it leads to financial crisis, sudden outflow of foreign capital invested in the country, default of loan of borrowers, depositor run, the failure of one bank may directly affect the other bank. So the financial system stability is important. Otherwise, what happens? All these things are taking place. One of the main factor for this financial system stability is what end up with finally is what customer trust and confidence, right? So all things happen, right, if the customer trust and confidence is not there. There may be a financial crisis, there may be a sudden outflow of foreign capital invested in the country, default of loan by borrowers, depositor run, you know what you mean by depositor run, and it has a failure of one bank may directly affect the other bank. So all things poor financial system stability leads to all these issues. Financial system stability is purely depend on what the public's and investor confidence, right? That is why financial system also critically depends by on public's and trust and confidence, right? Okay, so that's important things what we have learned. Okay, now let me discuss in a different way how a bank, how financial institution, a bank, for example, develop the trust and confidence of the customers. What initiatives, right? How banks develop or how a bank increase the customer confidence. What initiatives bank can take? Okay, so can anybody tell me what initiatives bank can take to build up customer confidence? Right, banks have taken a lot of initiatives, right? Okay, one thing. Now think your bank is doing this. Balance confirmation. First point, you can write down in the blank thing what initiative customer can take. We call balance confirmation. Balance confirmation. Some banks are telling you want to do only give you a missed call to this number. They will give you, right, your balances. Even for credit card, your account balances. Only thing is you need to give a missed call. Then you get a message, SMS saying that, right. So your account balance is 250,000. So you are confirmed. So you build up the confidence. So you know, so nothing happened to my money. It's there in the bank. So that is balance confirmation. So a lot of banks, Sampath is doing, other banks also do it. Balance confirmation, missed call, right? So there is one way your bank is trying to build up customer confidence. Second one, the moment you go to withdraw the money from the ATM machines or CDM or whatever the machine, or you go to the merchant and use your credit card, but the moment you did the transaction, what you're getting? You're getting SMS. So SMS confirmation, the second point. Now you're sure that, right, somebody has not use my card. So once I use it, so automatically I get the you done the transaction in Keel, Super or wherever amount of this, and they say your existing balance is so much. You're happy. Suddenly you noted that you have not withdrawn the money from ATM, and you have not done any transaction from any merchant, but you get an SMS. You have withdrawn. That you alert. Why? So I have not done any transaction, but somebody has I will use my card. So through the SMS confirmation, so facility given by the banks to you all, in fact, you have the customer confidence. You know your card is safe, your debit card is safe, and your credit card is safe. But it's now become legal thing. But SMS confirmation. Right, and also that's the second one. First one, balance confirmation. Second one, SMS confirmation. Third one, you see now you may have a lot of banks mobile apps, right? So through the mobile apps, some banks are having, if you have an FD, right, they tell you when he is going to renew and what is the interest rate you're going to earn, all things through the electronic ways, through banks apps. Commercial banks, a lot of banks are having these apps, right? So your transaction details, all things you can just through login to your mobile apps, right? So another way you have a confidence. You build up now. So you aware that your card, your debit card, your credit card are nobody's misuse, right? So that's to build up your confidence of your financial transaction, right? Okay, that's the third point. Now, first one, balance confirmation, SMS confirmation through the mobile apps. Fourth one, so how can you build a customer confidence? Right. So sometimes you have established call centers. Call centers. Now sometimes little difficult to get the call center. You have to hang on. Then what you're getting the moment you dial, please all executives are busy. All executives are busy, and we will record your this thing in order to get a better services or to give a better training to our people. And due to this coronavirus, we are limited staff are working now. We have a lot of issues, but at least there are some call centers facilities. If you have a lost card, you can immediately, suppose you lost your card, to whom you talk, the banks are closed. So we call center and tell the call center to block your cards. So that is your build up your confidence through the call center. And also you can have lot of issues through the call center. Right. Only issue is in Sri Lanka we have to wait for few minutes to hang on. They will tell you so many things. Use your mobile apps. Wait on. We all busy. Please next available order of receiving calls and blah blah. A lot of things are telling, but still they provide a better services. Thereby you build up consumer confidence. Right. Second, call center facilities. Third, fourth, fifth one, promptly handling customer complaints. Next point, promptly handling customer complaints. So this is another, your bank are doing all these things, customer complaints, right? Okay, so promptly handling customer complaints. Not only that, then uh, how can you build a customer confidence again? Conduct financial literacy programs, right? So the banks are conduct financial literacy programs to customers. They know how to use their cards, right? And they add lot of security features to your systems. They educate you, telling that when your so nobody's don't give your PIN number or any things to anybody other than don't disclose your PIN number to anybody. So through that they educate you, right? So all these things will facilitate for your bank to build up the customers. Okay, clear now? If the examiner asks from you what actions your bank can do to build up a customer confidence, so these are the things. SMS confirmations, balance confirmation, mobile apps, having call centers, handling your customer complaints properly or promptly, uh, conduct a financial literacy program, as well as conduct or carry out ethical advertisement, not to do any misleading advertisement. Also, build up the customer confidence. Right? Okay. Right. Harinda, Thelwada understood. Okay with that? Okay. Keep quiet.
Okay, sir.
Right. Okay. Now let's look at it. What a central bank is doing to build up the customer confidence. Right? Central bank, as our regulator, also do lot of things to build up the customer confidence. So, all right, let's look at it. All these things, right? Okay. In the interest of the strong and sound banking systems, central bank also initiated many things to build up the customer trust and confidence. One is what? Okay, introductions of customer charter. Now, I don't want to explain that. I think it's a mandatory now, right? So, introductions of customer charter. So, what banks need to do to protect the customers, right? They introduce customer chart to the banks. Then we have also central bank introduce all banks need to have a comprehensive directions on integrated risk management framework. So that means banks need to have a integrated risk management framework. Bank need to understand what are their risks, how to mitigate risks, right? So example for stress tests, they need to carry out, right? So you must have an integrated risk officer to do that. We have a board subcommittee. You may learn under corporate, sorry, you may learn under commercial banking's corporate governance. So you may have a separate board audit committee, separate board subcommittee to look into the integrated risk management framework of your bank. So thereby you're trying to protect your bank. Then, so we have a comprehensive directions issued by the central bank about the corporate governance, right? So some of the things you learn may uh, under again corporate under commercial banking. What is corporate governance? The manner in which your organization control and manage is called corporate governance. Very simple definition is the manner in which your organization is managed and controlled is called corporate governance, right? Okay. There's supervisions of banks and non-bank sector for on-site supervision and off-site supervision, and then so bank put some conditions to have a minimum capital requirement. That means the capital adequacy ratio you need to maintain, certain liquidity ratios you need to maintain, right? Or 80 20% and things like that, and the net funding reserve ratio and liquidity coverage ratio banks need to maintain. So these are some of the liquidity requirements. So if the customers want the money, so bank in a position to pay. For that, banks must have adequate liquidity. For that, central bank have a lot of rules and regulation, what sort of liquidity requirement you need to maintain, right? And also reduce concentration risk. Don't give loan to same customer. There may be accommodations. Maximum amount of accommodations can be granted to a single customer. We call single borrower exposure. Bank cannot give loans to a customer. Can give, there is a limitations, right? So those things we learned earlier also, right? Some of the initiatives taken by the things, and also customers, banks, central bank also introduced deposit insurance scheme, right? There are so many things, right? And central bank also, remember, also educate customers about the certain informations about prohibited schemes, inform customers what banks to deposit, who are the registered financial institution. There are some uh, press advertisement. Central bank also put it to the general public to educate them, right? uh, and also recently, remember, central bank is established, remember, one important thing, customer relations department. So recently, last their 75th anniversary day in September somewhere, the central bank developed a separate department called Customer Relations Department. If you have any problems, you can call Customer Relations Department and tell your grievances. So it's an initiative to protect the customer uh, things, right? So likewise now, you noted that in order to build up trust and confidence of the customers, what your bank can do, what actions your bank do, what initiative, what strategies your bank is adapting, as well as what central bank is doing in order to build up customer trust and confidence. Then, apart from that, you may also have government, right? Government also introducing new rules and regulations, right? To strengthen the activities of the protecting the customers. New consumer protections laws, new banking laws, they come up with something, right? And also here, you under central bank, you can put in order to support protect the customer confidence, you can have a financial ombudsman, then you can have a deposit insurance scheme, you have a credit counseling center, right? So those are the initiatives taken by the central bank also to protect customers, right? Apart from this, to build up the confidence, right? Clear? Now we learn. So in confidentiality management, first we learn what is confidentiality. What is public confidence? So we discuss why public confidence is important for a bank, right? Why, right? So that's the first part. So our topic, confidentiality management. Confidence management. So why confidence management is important? First, we discuss what is public confidence, right? Why banks need to have a better public confidence? We discuss the issues, right? And then we discuss, in order to build up customer confidence, what the bank can do. I explained SMS and things like that. Then, as our regulator, what they can do and what government can do, right? Okay, I think you understood that part properly. Clear? Any questions, Sudha, on that?
So
Any
by
questions?
display, yes, by displaying the financial statements and the income statements of the bank, we can
Yes.
improve the confidence.
Yes, that correct. That is what I mentioned. Without that, okay, you can put it where it covers. What, when make it compulsory, under what directions? What you said is exactly correct. Uh, where it's make it compulsory, under what is the directions given by the central bank? You need to publish your annual statements as well as quarterly financial statement in the newspapers. Under what directions is given? Come on, I think you wrote it.
Customer charter.
Customer chart. That is what I told you earlier, right? I explained, what customer confidence, strengthen the customer bank relationship. A customer charter introduced by mandating the banks to follow charter, right? Okay, now no problem. You can put that customer charter covered that. Okay, so it's understood, right? Doesn't matter, but even though if you want to put it, no problem, right? This add values, right? Add values to your answer. Right. Okay. Any clarification, Puta, before I move into the next section up to now? Right. Now is first you need to learn here what is confidence management. Right. Then what is public confidence play an important role? What are the repercussions? Right. In order to improve the public confidence, what your banks can do, what your regulator can do, what governments can do. Right? If you can understand all these things, right? I'm further explaining now some of the things. Explain the specific importance of the customer trust on banks in compared to other business organizations. Now I'll explain to you earlier also. Any distrust situation, right? Any distrust situation is contagious, leading to depositor runs. I think you know what you mean by a depositor runs, no? Right? I explained to you when you have a deposit lost the trust and confidence, whatever, the customers are physically rushed to the first electronically try to withdraw the money. Otherwise, if they close, they physically move into the branch and ask the money. Right? And remember also, if you have some problem with the bank, so there's two things happen. One thing is the loan customers also not going to pay. So there's a loan defaults also taking place. Not only depositors go and ask the money, bank have another problem. But the people who taken a loan, they are not going to pay back, thinking that bank is going to close. Right? So banks affect in both ways in that case. Right? So therefore the financial institutions are very systemic risk. So that is what you call systemic risk, right? I not like any other business organization, right? Now, what banks are run with the depositors' money, and also another important thing is now it's very when you tarnish your or lost your reputation, it is very difficult to get the new customer. Not like any other product. So you can new marketing, you can use it to regain customers. But in the financial sector, it is very difficult to get the customers back to your organization. Right? So that is why customer trust play an important role when you're compared with other business organizations. Okay? So when you are compared to business organization, customer trust is play an important role in banks when you are compared with other business organizations. Why? Because the banks are runs with the customers' money from their deposits, right? Not like any other organization. And that's a one fact. Second factor is once they lost the reputation, it is very difficult to get the existing customers as well as the new customers back to your organization. Like any other organization, you do something and get the business, but not the banks. So that's a difference, right? Second, what is explain the nature of trust and with depositors have in banks, a financial institution, and how should the institution can act to protect this trust? Now, what means by the depositor from trust? Right? What do you mean by a depositor as far as the bank is concerned? First, what you expecting from the depositor? They can withdraw the money with due interest at any time they demand. Deposits are well protected. Right? So that is my expectation. As a depositor, what I am feeling a trust about the financial institution, as I explained to you earlier, the public confidence. Remember, I go to the bank as when I need money, I need to get the money with the interest. That is my first expectation from the bank. Right? So how bank can develop the trust? Have a better close relationship with the customer. Maintain a sound liquidity. Quality lending out of deposits funds. Good governance and risk management. So these are the things we learn, we put it. How you maintain the trust close relationship with the customers, maintain sound liquidity. That means when you want, we have the money, and also quality lending. Why we need quality lending? Because we are giving depositors money. If these people are not giving back the borrowed money, if you are giving to the wrong customers, what happens? So you are losing deposit funds, right? If you have a good governance and risk management, so you can you can build up the trust of the depositor, right? Let's look at it now. What is the borrower expecting? Different type of customers. What do you borrower think about the trust about the organization, right? What is the nature? So borrower, what he expecting as loans are settled during the given time. So that's the nature of, and also what they expecting institution to help in times of difficulty repayments. Now, these days we have a moratorium, right? So you know what do you mean by moratorium, right? Moratorium and a lot of concessions given by the banks due to these corona impacted businesses. So that is what borrower expecting from a bank, right? They look after them when they are at the bad food, right? Okay, so and also what borrower expecting from a bank, so issue lending without much hassles. That means so don't ask so many information, so many files, so many reports, right? And also we need to follow up them. Once you grant, most of the institutions, whatever, they grant the loan, they not follow up. So the moment you give loans, you need to follow up whether they are using this loan to that particular purposes, right? Or maybe used for personal consumption. And sometimes what they expecting for rescheduling in genuine default cases, right? We do rescheduling, not willful defaulters, genuine defaulters, right? We need to reschedule now these coronaviruses time. So a lot of banks are rescheduled the loans, right? So rescheduling means maybe giving a new loan, so give a more facilities, more time to pay their loans, right? Extended the credit period like that. That is rescheduling, right? So explain the nature of trust. Sri Lankan workers abroad, right? Workers. Now, what is expecting? Now, people who are working abroad, they send the money to Sri Lanka. So, what is they expecting from the bank, right? What is they expecting? Efficient delivery of remittances and foreign deposit at favorable terms. Now, of course, this is so government are expecting more remittances from foreign loan because they want to strengthen their uh, foreign reserves, right? So we are giving little high interest rate also. We have a separate account for that also, right? These things I think you learn under commercial banking, right? Then I want to tell you, please study a little bit of foreign accounts, foreign currency accounts. There are 4 foreign currency account you need to learn: business account as well as the individual account. Right? So I think you may learn under all these things under commercial banking. There are 4 type of foreign currency account. Not NRFC no more there, not RFC there, right? So we have a 4 separate accounts. Learn little bit on that also. So then, so what is the remitter of Sri Lankan worker who is working abroad expecting for speedy distributions of remittance to their needy people, and think about charges and communications, right? Now you see a lot of TV commercial is running, SMS. They send the message. The once the money comes to your bank, they send the SMS to beneficiary or the receiver, telling we have received so much money and please come and take or whatever. Right. So these are the things a customer is expecting from a bank. Right. Okay, so then we going to learn a little bit of certain relationship building and maintenance. And in fact, this is you're going to learn under and low, but I'm going to explain a little bit of that also, right? So what is relationship? The relationship refers to state of connection between, is an association between two parties. In here we are talking about customer and a bank. So we have a relationship. So we have a long-term relationship. That is why we mentioned the relationship marketing, right? So there are various theories of relationship, right? But most important thing is the relationship is attract, retention for mutual benefits, right? Now, what is relationship management mean? Right? Uh, it's an interpersonal. So banks, you may have a relationship management. Banks, you may have a relationship officers, right? To deal with customers, right? And this managing relationship, like creating customer trust and confidence, also difficult task, right? As because we consider customer is the king, and we need to put in the middle of the business cycle, right? Especially banks, because we are, I keep on telling, we are, banks are earning profit from the customer's deposit. So therefore, it is a paramount important thing for banks to maintain a better customer relationship, right? Okay, so ICT, that means information communication technology, also facilitate us to provide a better customer relationship, right? Through customers relationship, what you try to do, we try to satisfy the customer, and the moment you satisfy, you may be delighted, and then ultimately increase the profitability to the organization, right? That is why we, so let's look at it. Some of the different type of relationship with the bank and the customer is having, right? First one, we learn the relationship vary according to the facts and the circumstances of the transaction involved. First one, we say mortgage or mortgagee relationship. I think that's, you know, what do you mean by a mortgage or mortgagee? If a bank takes a security, sorry, if a bank takes a security from a debt from its customer, the customer become mortgager upon the execution of the form of charge, and the bank become mortgagee. So when you're going for a loan, now take a housing loan for an example, and what is the relationship you're creating? The moment you take a housing loan from the bank, you need to put your land or the house as a security, right? So then the relationships we call mortgager mortgagee relationship, right? And the second type of relationship we call bail bailey relationship, where the customer has deposited valuable items with the bank for safe custody. Then the customer is a bailer and the banks become the bailee, right? So that's the relationship. We have a, banks are providing fee-based income method, which call keeping your valuable items in the locker, we call the safe custody. So the relationship build up through the bailer bailee relationship, right? Then another type of relationship is a principal agent relationship. When the customers draw a check, now customer writing a check, that draws a check on his account, he act as a principal, right? Not PLE, PAL, principal. Now we say he will tell the bank to do this, right? So he write the checks. Now if you look at the checks, you say, "Me duttu gavanu gevanu." So instructed bank. So therefore the bank act as an agent. The customer is a principal. Principal says, tell your agent to do this, to pay this amount to so and so, right? Act as a principal, and the banks become his agents to pay the checks if there is a sufficient funds in the account. So the banks is an agent, principal is the customer. So that's the principal agent relationship, as well as a debtor creditor relationship. When a customer opens a bank account and deposit the money with the bank, The customer is the creditor and the bank is the debtor. Right? The moment you go to the bank and open an account, you deposit the money with the bank. So what is the relationship will create? Customers become the creditor and the bank is the debtor. So, but the moment you take the loan from the bank, right, or customer borrow the money from the bank, the situation is other way around. Then it's become the role is reverse. So then the bank become the creditor, the customer become the debtor. So in the we have a debtor creditor relationship as well as the creditor debtor relationship. Why? The customer can sit the both side of the value chain. One time is a depositor, one time is a borrower. So then the relationship may be reversed accordingly, right? Clear? Right. So then the basic relationship between bank and customer is, as I explained to you, is a contractual relationship. Okay? Right. Now, so there may be because of this as a contractual relationship, there's a number of rights and duties, bank as well as the customer. Right? The law will talk on much of the things. Okay, now you look at it, another important little bit of theory about the relationship stages, or we call a loyalty ladder or a relationship ladder or whatever you call it, right? Okay, now think about your customer, right? Now, who is a prospect? We talk about the prospect. Yes, has yet to do business with your firm, but he has not opened an account with you, but there may be a possibility of opening an account with you is a prospect customers. Is a prospect customer at the very early stage we call prospect, right? He may be potential to open an account in my bank, right? It's called the prospect. Then the moment, sorry, then the moment he has done a business with your bank or open an account with your bank, we call him as a customer or a buyer. Call him as a customer of a buyer. The moment you open and done some transactions or some business with you, he called a buyer or a customer, right? Okay, customer, right? Then the customers keep on buying your product, do business with you, repeat customer, continue to do business. We never say it's our customer. We say he's my good client, right? So you're converting from prospect to client now, right? So he keep on, he talks, likes your firm, but only supports you passively. But he supports you. We call he's a supporter. So now client becomes supporter, but he likes your firm, but only supports you passively. What තමයි කියන්නේ? අරයා හොඳද? අර බැංකුව හොඳද? හොඳයි. Right? But he support, but not support actively. Right? Passively only support. The moment your customers become an advocate, because not only support, and he will support you and talk about your organization. That person is telling other people, why don't you go to that bank, mate? They will very good service, they give this and blah. Because he acts as advocate for you, your organization. And finally, he's become sometimes a business partner. Whatever you do, that customer with you. When you have a function, customer with you, right? Good things, the bad things, he is a partner with you. So what, as marketers, we try to do? We try to, first, at the very beginning, is called traditional marketing. We did only prospect and buyer. We do to get the customers only. Then we forget. But today, it's not enough. So we need to convert this your customer or buyer to partner. So that is the part we call the relationship marketing. We don't want just a customer, we need a partner, right? So the relationship marketing, what we expecting, convert your buyer to the partner, right? So that is what you call the relationship ladder, or sometimes we call loyalty ladder, or whatever you call it, right? So banks marketers therefore try to convert uh, uh, your customer to your partner. It's a long journey, right? Okay. The last part of in this case, right, we call customer value propositions. Customer value proposition. So you need to learn. Now, customers are not just buy products. Customers are buying value. Customers are buying benefits, not the features. Customers are buying benefits. Customers are now look at value. So what is customer value proposition? So CVP is the reason for customers to buy a particular organization product or service as opposed to custom competitor. Now, I can't tell you, somebody can tell why there are enough girls in the country. So why you marry me? Somebody can ask. Then what the answer? Because you give me higher CVP. Right? Somebody can ask, okay, there are enough girls, but why you marry me? Then I will tell, or the boy will say, because you give me higher CVP, customer value proposition. Likewise, why you come to my bank? Because my banks give more than higher customer value proposition, so high value to me than my other banks. Okay, so then you look at it today. How can you improve your customer value proposition? So CVP means benefits minus price, right? Customers are look at it. What is the benefits I'm going to get it against my price? So the organization which give high benefits, that means high CVP, right? So next we look at it. What is CVP? What are the components of CVP? Now I will tell you some example. Okay, then I'll give you now. Don't get misunderstood. I'll give you an example, right? So somebody is asking, the girl is asking, why you marry me? Then I will explain to you, because CVP has three components. It's give me high economic value. I'll say, because so your parents give me high dowry for me. So that is why I marry you. That's economic value. Now, why you bag with me? Then the question asking, because of you give me the highest interest rate for me. Why you take a loan for me? Because you gave me the lowest interest rate. That is why I do business with you. That's the first part. So you need to look at it the economic value. So why you marry me? Because you gave me the highest dowry. Your parents give me the highest dowry. That is why. Economic value. Why customers bank with you? Because your bank give me the higher interest rate for my deposits. Right. Second, what is material value? Then look, what is the material value? What is material value? Because you are not only, you are giving a lot of benefits to me, right? You may have a lot of technologically driven apps, mobile apps, right? Not only just interest rate, you give a lot of added values to me. I can see, I can transfer my money from at home. I can transfer the money from one account to another. I can pay my utility bills like that. She will tell you. That is why I want to do business with your bank. Then I'll come back to my marriage case. Why? Oh, you're the only child, right? So that's a material value, only child in the family. So not only dowry, I may having other things also. Oh, sometimes you can say your father is a politician. I one day I can become a politician also. Then they say your father uh, is a police person, a chief guy, world police person. So I have a more power because only I married to the your his daughter, like that. That's a material value. Likewise, third one, emotional value. That's the third one. Why you bank with my bank? Who? So having an account with your bank, I have an emotional feeling value. So I be a respect of having maintaining an account with this bank is a prestige for me, right? Sometimes we feel it, right? So that's the emotional value. Then if I ask you the marriage girl, marriage situation, what is the emotional value? So only you having a long hair. So that is I marry you. Beautiful queen. Huh? Mistress. The mistress or world mistress or something. Be careful of telling all these things. So that's the emotional value. Right? So what organizations try to do? You try to add value. So banks also try to add value for your product and services. So when you're going to value, you need to look at it economic aspects, material aspects, as well as emotional aspects. Right? So that's a small note. We will come back to, we just completed the confidence management. It's a very, very small area. So thereby we have come to an end of the sessions. Okay, clear? Right? So today is going to be our last day. Right? So I'll be with you for the last 4 months or so. I try to explain to you all the things, and we started with HRM, right, and then we move into confidence manage sorry, to customer protection side. So we basically covered the syllabus, right? So I am going to have a it is ideal for me to have another day, but but according to the time schedule. So next week's holiday, 25th, no, and then the May. So your exam's going to be there somewhere around, to my understanding, maybe somewhere in June, right? So therefore, you have a ample time, right? You have ample time, and so you cannot fail my subject. I am sure that once you follow it, you definitely pass. And I'm also going to have a some uh, revision. I can't remember the date, and you can see the web, right? They will announce somewhere in mid-May. So we'll have a 8 hour, 2 day, 4 hour online revision class. So please join that also. So I will have a model question paper also. We will discuss and do some past papers as well. I think even for not that, so in my notes, but I explained to you, if you have a recorded version, keep it, go through the recorded version, right, and try to learn. I think you are definitely pass, and also it may be benefited for you to do other subject as well, right? So if you have any questions, you can call me, and first you try to put me an SMS. If I not answer, my number is not 777, easy to remember, not 777, 864202, right? Simple. That is started with letter 8, then deduct to 864202, right? Not 777. You send me an SMS. I will answer for your any questions you want to clarify for me, right? If I not answer, then I will definitely talk to you and try to answer, right? So thereby, thank you with me for last maybe 3-4 months. So with me, started with HR and then clients, financial clients, law, marketing, and confidence, right? So it's very easy for you to pass the exams. So we have enough time, as I told you. Nobody got that sort of time period. I think you have almost two. In fact, the results, if you want to communicate it to others, the results of the, I think so, the results of the exam, maybe they going to release somewhere in 22nd, 23rd of this month, right? After the new year, the institute may be releasing the last January's exam results as well, right? You try to learn now itself, and you have enough 2 months notice. Enjoy your new year and start. Try to learn, study. Try to learn in between, and you sit for your exam. Okay. Any questions you need to before I wind it up? Any questions you need to ask? Avita, any questions? Right? Any clarification? Avita, some of the students I can't remember the names, but then they are continuously participating in my lectures. You are though not participated, you can record. You can see the recorded version. Even today's one, I went little bit of fast because we want to cover, but I think you in the position to understand what I taught you, and hope everybody may get B pass at least. Of course, C. Uh, so so thank you again. Be with me and actively participate with me. Ask some question. That's the nature of this online lecturing. But I always prefer to have a physical presence. Then I can see really you understood a lot. But thank for your responses. Um, any questions finally? Right? Any questions for that? Any questions you want to ask from me? You're happy, or what do you think? You are happy with my lecture pattern, or you understood, or not at all? Huh? Any feedback?
All understood, sir.
No problem, no? I think you have no problem. You can easily sit for the exam, no? Haridhar, no problem, neither. No, right? Kaushalya, Krishan, right? Okay, Sandanika, right? Sandanika, I can remember your name is always there. You'll be participate. Sadhuni, right? Sanjeevani, right? Tyagaraja Kulani, or that's another, I don't know, it's a girl or boy, but I can remember your name. You participated almost all my lectures, right? I'm just Dayaratna, and there's another boy, Dolavato, somebody also usually be there, right? Okay, Puta, then thank you very much. Please don't be shy to, if you want any clarification, please call me and put trust. You try to send me an SMS if I not answered, right? I will definitely, and mention you are a student, right? Then only I knew you're my students. Then I will return your call. Okay, right? Thank you very much again. So have a nice new year, and we will back you again on if at the revision, and not of course the DBF. I will lecturing the financial institution management for DBF students, right? Okay, thank you very much, and wish you all the best, and hope you end up with at least B's, right? Okay, Hari, right?
Thank
Thank
you,
you very
sir.
much.